Well, let's look at the next company here. The next company is Polaris Inc. Their ticker symbol is PII, and this is an interesting company. I know, Harrison, you have some information on what they do, so I'll kind of let you provide the details.
Founded in 1954 by a couple guys. One of them's name is David Johnson.
No way.
That's my father's name. Wasn't him, though. This company was founded before my dad was born. But Polaris, named after the North Star. They do all kinds of things: snowmobiles, adventure vehicles, ATVs, Indian motorcycles, off-road stuff, snow, marine, all kinds of different, vehicles like that. And I don't know. I mean, they're the company that makes razors. I don't know if you've ever sat in one of those things.
No.
It's like sitting in a cockpit. The newer ones are very fast, and I mean, I don't have one. My brother-in-law has one, and they all go out to the desert and stuff. And they're pretty cool and kind of scary to be in.
I didn't know they had the Indian motorcycles.
I didn't know that either. No.
Huh. They must have acquired that somewhat recently, potentially, because obviously Harley Davidson and Indian, but we've talked about Harley Davidson having issues with the demographic change. I'd assume Indian's going through the same situation where people aren't buying to the same capacity. I got to say, overall, my concern with the Polaris is its recreational vehicles, right? Snowmobiles, the razors in particular. If the economy slows, that probably would have a huge weight on sales for a company like this.
Yeah. I mean, it's a very expensive toy. A razor costs $30,000-$40,000. It's unbelievable. It's like buying a car. And yeah, that's not something that you're gonna buy if things slow down.
Yeah, and looking at the numbers here, I mean, some things that kind of stand out. The stock is, I'm gonna say, pretty heavily shorted. A short percentage of float's about 22%. Kind of surprised by that. No price to earnings, no earnings for the company. Price to sales at 0.4 is lower than the industry average at 0.6. Price to cash flow, so no earnings, but good cash flow here. Price to cash flow is 4.6, below the industry at 6.5. Tells me there's likely some non-cash expenses that took place for the company. You do get a nice dividend yield here of about 5.2%, so I'd say that's a big positive. No payout ratio since no earnings, but free cash flow payout ratio is 36.4. I wouldn't be troubled by that, honestly. I'd have to understand a little bit more about the earnings, but very big positive there to see they have plenty of free cash flow to pay that out. Balance sheet, question marks here. Current ratio is 1. Debt to equity, though, is about 170%. Big question I have for this company: do they carry the financing, or do they use a third party to do the financing? If they carry the financing, that's going to elevate that debt to equity and could still maybe make this balance sheet, I'm going to say, okay. Looking at the current price for Polaris, it's $51.44. It has pulled back from the 52-week high of $87.83, and the low here is $30.92. See, year-to-date, the stock is down about 7.8%, and frankly, just not been a good long-term performer. 1 year down 31%, 3 year down 50%, 5 year down 42%, 10 year down 50%. Gosh, I guess people haven't been buying enough of the razors and the snowmobiles out there.
I know a lot of people buy used ones, so maybe that's part of it. You buy one, you have it for 2 years, and you sell it, so there's just this massive aftermarket for it, and I mean, maybe the new sales really isn't in there because they're so expensive. And that could also, I mean, as far as the stock goes, the decline that the stock prices had could be part of the reason why the dividend yield is higher. Didn't used to be that high, but as the stock price declined, that yield just kind of got higher and higher.
Yeah, no, that's a good point. Understanding the way dividends function. But I'm kind of surprised by this. I was hoping that maybe this could be something positive. Again, I love companies with good yields. Company has apparently good cash flow. Earnings have been a problem. Again, I'm assuming it's because of write-downs, but even going out to December 2026, I see estimated earnings per share just $1.06, gives us a target sale of about $17.60, so well below that current level. Appears there's potentially some issues going on with Polaris, and if the lack of earnings bleeds over into cash flow, that could cause a dividend cut, which would be very disappointing if you bought this company for the dividend.
Yeah. I mean, wow, I can't believe that their earnings are that low. Is it competition that they're dealing with, maybe? I mean, I know that there's, now they're competing with General Motors because things cost the same amount as buy a car.
Oh, $30,000. Wow, that's crazy. Well, let's move on to the last